The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Good morning, folks. Welcome to the terrific Thursday, the September 17th edition of today's Trader's Edge show. We're going to combine this with the Trade What You See show, Larry Pesavento show. So filling in for Larry this morning. Of course, if you're listening in at the normal Trader's Edge hour at 1 o'clock, this obviously is being recorded. But hopefully you're listening in live. I'd love to take your call. You can reach out to me at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that subject heading, if you'd be kind enough to put radio show question, that would be great. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, we've got all of the U.S. equity futures. All four of them are trading to the downside in the red. You've got the Dow futures off 381 points. The NASDAQ off 319. That's nearly 3%. The S&P is down 61. That's about 2%. And the E-mini is off 26. Now, it's not so much the dollars. It's the question is, where are they trading into? Are they trading into support, below support, above resistance, below resistance? And we're going to go take a look at that. If we look at what took place in Asia last night, we had the all Asian markets were lower, as well as Australia. We've got the European markets that are trading lower as well. Gold's off $30. Silver's down 83 cents. That's 3% to the downside. T-bonds, the U.S. Treasury, the 30-year is trading up over 1 point. It's trading out at 177.10 out here. U.S. dollar index, well, this would be good if I just change this to the current contract out there. I'll have to make that adjustment. Let's see what we've got. The U.S. dollar index up 14 pennies right now, trading out at 93.24. So let's begin by taking a look at what's going on across the globe. Then we'll come back to the U.S. markets because it's important to understand just exactly what do these numbers mean. And so we're going to begin by taking a look at what's going on in Europe right now. Let's go take a look at the FTSE and the DAX. So the FTSE is trading out at 60.57. What you're going to see, what the FTSE has done, so if the European markets are giving you and I a signal out here, that's what we're really looking for this stage of the game. So what we can see here about the FTSE, folks, if you're watching this on Tiger TV, my white background chart, you're going to see a red and green squiggly line. Like that's what that is. The actual name of that is the oscillator and change line. I like to call it Stevie's green and red line out here. Now, the cool thing about this line, this tool, it's not a moving average. I do teach people the exact formula, exactly how to create it, exactly how you can have this on your chart out there. So just subscribe to Mastering Probability. Even if you do it for 29 days where it costs you nothing in essence to do that, you will be able to. And this line is extraordinarily important. It's not a moving average. It cannot be replicated that way. But the importance of it is in the UK, price pulled back, tested, and rejected Stevie's red line out there, 59.93. Is that delivering some kind of message to us? I don't know. I think that it is, but we'll make that determination come the end of the day. If we take a look at the DAX, what do we have here in the DAX? Now, the DAX is trading below Stevie's green line out here. We can see a series of higher lows, higher highs out here. We do see the Rhodes Momentum Indicator top signal. That's the black diagonal lines that are drawn, the bearish engulfing creating that. So price is trading. Resistance is going to be the high of that trading session from September 3rd and 13,460. Support, by the way, is 12,535. So price is trading below the green line out here. Says further retracement is likely. But the line being green versus red is really significant. So with regard to Europe, it's a little bit of a mixed bag out here. The FTSE says, hey, no big deal out here. Inside of Asia last night, here's the Hang Seng. Now, the Hang Seng formed a nice little TD9 count bottom about half a dozen days ago. And we can also see that Stevie's green line had turned red. And so as we take a look at the Hang Seng, when that turns colors, it tells us about an impending test of price in that line. And that test will tell us whether things are bullish or bearish. Well, we can see here that price tested and rejected that level. Then yesterday closed just slightly below that. Today we're below that, closed below that. And so it closed below this session right here. This is the session from September the 10th, and the low there is 24,213.36. A close below that will suggest that price will pull back to its breakout level, 22,779. With regard to the other Asian markets out here, nothing really significant for me to point to for you. So let's go now move over to the U.S. market. So what are the U.S. markets doing out here? Excellent question. We're going to go find out. And they're each doing something slightly different. If we take a look at the ES Mini out here, the ES Mini, you're looking at the very left-hand panel. In fact, let me just do this. Let me just expand it a tad. And so I'm going to do this right now. I'm going to turn off the weekly profiles. So give me just a moment. And let me pull this over here just so we can get a decent feel for the message from a daily standpoint. So I'm turning off the weekly profiles, which are the green lines that are out there. I'll turn it back on in a moment. But what I really want you to take a look at is over in the upper left-hand corner, you're going to see the data box, and you're going to see the top. It says top D, CTRD, BOTD. That's for the bottom, the top, and the center. Now, when the center is closer to either the top or the bottom, versus being just dead in the center, it tells us whether the structure is bullish or bearish, meaning more bulls, in this case here, are sitting between 33.15 and 33.44. The low this morning is 33.10. So far, price is held. Now, if price closes below the bottom of the daily profile, this would tell us, because it's a bullish structure, this would tell us that the move lower has resumed. And very likely, what we'd be looking at is an A to B equals CD to the downside. Now, why isn't my A to B equals CD tool on here? I don't know, but we're going to go ahead and add it. So if you give me just a moment, let me add that, because we can draw that panel. Now, I'm not saying this A to B equals CD pattern is going to form just yet. Price needs to close below the bottom of its bullish structured profile. But if it did, we know what that A to B equals CD would look like. So I'm going to go ahead and give you the A point out here is going to be the high from September 3rd. It's going to be. I was going to try to. Well, this is crazy. I can't get that tool to work. What is going on out here? Oh, man. Let me see. Let me try this again. There we go. So there's our A points of high at September 3rd. The B point would be the low from September 9th. And the C point out here right now could be September 16th. If that is the case, then we're looking at a 1-to-1 A to B equals CD or Gartley buy pattern. That would take us down to 31.29. 1 to 1.272 would take us to 30.50, and 29.49 would be the 1.618 A to B equals CD retracement. So what you're going to do today is you're going to be watching like a hawk the close. And if the ES Mini closes below 33.15, that's the signal that the move lower in the ES Mini is underway. Now, the issue that it has as we speak right now, let me just pull over the market breadth. So you've got price testing a bullish structured daily profile. So what is the market breadth for the daily time frame for the S&P 500? Well, as of this moment, as of 9/14, here's what we know. We know that market breadth for the S&P 500 is bullish. What do you mean bullish? There are 181 instruments trading above the top of their profile versus 104 trading below the bottom of their profile. There's going to be an all-out dogfight inside the ES Mini, inside the S&P 500, over that bullish structured profile out there. So what we're going to do when we get back from this breakout here, we're going to go take a look at the short-term time frame charts. We'll come back to the daily charts for each of these equity futures contracts as well, and we'll figure out what the markets are communicating to us.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we've got the Dow futures are down 358. NASDAQ is off 318. The S&P futures are off 58 points. So we were looking at the daily time frame for the ES Mini before we went to that break. We know that price is testing a key level of support. We also know that market breadth as of 9/18 for the S&P 500 is still bullish out there. So we'll see if that holds up. We'll come back and take a look at that towards the end of the show out there. But this is telling us that there's going to be an epic battle right now over this 33.15. I don't know who's going to win this battle, but we do know where the battle is happening. If you were going to ask me, is now the time to go short the S&P 500? The answer to that question would be absolutely, positively not. You're up against a bullish structured profile. Oh, I'm not showing the charts out here. I guess that would be helpful. So here, if you take a look you're looking at the very left-hand panel. So the charts are telling you the answer to that question is no. Not Steve, not me, the charts combined with market breadth. Now, that's a different message. Now, let's look at the short-term time frame chart out here. So let me pull over the ES Mini and see what it is that we know right now. And so here's the 30-minute time frame. In the 30-minute time frame, each of the charts were doing the same thing at about 3 o'clock this morning, which we're pushing lower or less relative energy. That triggers this Rhodes momentum indicator signal out here. What I also have on my screen are the opening ranges. The opening ranges are really key, folks. Now, look, you do not need to trade the equity futures contracts, but you do need the data that comes from us. You and I were data mining. If you're just making your decisions based upon the index ETFs like the SPY, the Diamond, the IWM, you are trading with 6.5 hours worth of information versus 23 hours worth of information. And if you're listening to this show thinking that you're listening to Larry, and you're not, my apology for that out there. But my point was going to be, or is going to be, this is the pattern recognition hour. Of course, that's really all that I do out here, is we just simply pay attention to the patterns. Now, inside the ES Mini, some of those patterns are the opening ranges. Now, what I take a look at are the opening range for the U.S. Open. That's between 6 and 6:30. Then I take a look at the Cash Open in Asia. Those are designated by the red lines, and it's just the first 30-minute bar. And then I do the same thing for Europe, and those are the blue horizontal bars out there. This becomes our full opening range, which is gigantic, by the way, because it's between 33.19, which is support, the European opening range. We can see that the ES Mini has pulled back to that level and tested it. And then we have resistance, which happens to be the U.S. opening range, which are going to be 33.86. So that's a very wide price spread. Now, right now, as of 9/21, price is trading below Stevie's red line out there. So it have any indication or confirmation that price, as we open, is going to go ahead and move higher. But if price can overtake 33.25, then its next stop will likely be 33.42 to 33.46. That's the current profile that is trading below. That was bullish in structure. And then above that would be 33.54. So one thing at a time out here. But the 30-minute time frame chart for the ES Mini is also saying, hey, not so fast. So let's see what happens at the cash market open. Different message when we take a look at the NQ. Now, the NQ is traded back to where we have two other prior lows out here. One was September 9th, one was September 11th, and now we've got today. So some people may call that a triple bottom out here. It's just retesting a prior swing area. So, and it's below the bottom of its bullish structured profile out here. So what's really open, what's fair game out here for the NQ is going to be 10.726. That is the bottom of its weekly profile. But the question is, can the NQ get down there? Well, obviously it can, but what are the short-term charts communicating to you and I? So let's take a look at its 30-minute time frame chart. Now, in its 30-minute time frame chart, it is below all opening ranges. The bottom of the European opening range was 11.022. So on any kind of a bounce, you want to watch 11.022. Why? Because if price gets back inside the opening range out there, back inside the bottom of the opening range, well, then maybe price is going to go take a run for the top of that opening range level. And that's at 11.284. I'm not saying it is. I'm saying that if price closes above Stevie's red line, currently printing out at 11.004, gets back really above 11.022, the bottom of that European opening range, and then really gets above the bottom of its current profile, which is 11.052, those would be the numbers that you're watching to give you clues as to where the NQ is trading. Price is pushing lower, doing it with less relative energy out there. So you'd also be watching for some type of bullish reversal candle. If we don't get that, if we don't get the bullish reversal candle, then the call is very easy. Where the NQ is headed to would likely be the 10.726 area, the bottom of that weekly profile out there. So now so we've got a real diverse market messaging out here. NQ definitely's got some problems out there. If we take a look at the Dow equity future contract, that's the YM, that's right next to it. Let me expand this out as well. And what we'll see here, I'm going to go ahead and turn off the weekly profiles. By the way, the bottom of that profile is 26,758. So if all heck breaks loose out here, you know that is the area where price would likely head to. But we're not dealing with that just yet, not at this moment. Why? Because price is really testing the bottom of its bullish structured profile. So I'm turning off the weekly profiles out here, and now you can see it. And that level is 27,464. So you've got strong support between 27,464 and 27,662. You need to see a close below 27,460. Again, another reason to say, hey, if somebody's saying, should I go short now? The answer would be no, not while price is back at support. Look, if we get closes underneath support, what this is probably signaling to you and I is we've got a pullback going into at least mid-October. So for another 30 days or so out here. But support could hold. You don't want to be trying to put on a short position while price is sitting right back at support. In the Dow, that's at the 27,464 level out here. Now, we've got that. And what we want to do is we want to go take a look at the short-term time frame chart. So let's go take a look at the 30-minute chart here for the Dow equity future contract. Let's go see what kind of signal it might be generating for us. And we're going to see something very similar to what we looked at inside the ES Mini. Now, inside the Dow equity future contract, it's now trading above the top of the European opening range, which is at about 27,595. The bottom of that opening range is at 27,496, and it's above Stevie's red line out here. Now, It's a 30-minute bar. It's only 925. So I don't know what the next 5 minutes will look like. But a close above 27,594, the Dow Equity Future contract is signaling to you and I that it wants to make a move back to the 27,706 area, 27,724. And above that, well, then what the Dow Equity Future contract would be doing would be taking us up into the 27,969 area. So the numbers look bad, but it's so important to understand what's going on short-term time frame, taking a look at the signals out here and understanding the opening range. And this is how you and I will be able to navigate the markets. And so let's finish this off here, this segment, by taking a look at the Russell 2000. The Russell 2000 is far away. This is amazing. Far away from testing support. Support on it is 1488. 1488 is the number out there. So it is way away from support. And that's an interesting message. What does that mean? The Russell 2000 is strong. Hey, the Russell 2000, as we speak right now, it is trading above, just looks just like the Dow Equity Future contract out here, trading above the European opening range. Stevie's red line out here. You need to see really a close below 1522.90. Not that you can't get it, but right now with price trading the way that it is suggesting to you and I the Russell 2000 equity future contract wants to make a run for the 1535 area. This is Steve Rhodes with TFNN. Right now we've got the Dow Equity Future contract down 333 points, the NQ down 307. We'll be right back.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we still have the NQ, the 30-minute NQ chart up on our screen here. What you can see is, so when this did top, was generated a Rhodes momentum indicator signal. So we have the exact same potential pattern on the bottom. So this was confirmed with this bearish engulfing candle. You can see it had two bearish engulfing candles that identified the Rhodes momentum indicator top, which has led now to, we can see price being stretched to the downside. We didn't get a bullish reversal candle on that 930 bar. It was close, but no cigar. It was close to a hammer candle. It is not a hammer candle. That body of the candle is too large. So now we're waiting to see if a bullish engulfing candle, some other type of bullish reversal candle forms. But this is what you'd be looking at as far as clues, pattern recognition clues as to what the market is doing. So let's move away from the equity futures for the time being. Let's go take a look at Goldilocks. I'm sure there's a number of folks that want to take a look at gold. So that was trading back about $30. Let's go see what it is trading into. Is it trading into some level of support? Again, we're just going to do the same breakdown with regard to whatever instrument we look at, understand support, resistance, and the pattern that is ongoing. So here we've got gold. So the question is gold pulling back to a level of support? So you're looking at the charts here. You can still trade if you wanted to the October contract, but the active contract is December. So that's going to be panel number 2. So you're looking at my charts right now. If you're watching this on Tiger TV, you answer the question, has gold pulled back to a level of support? The answer is no. It's pulled back to 2 levels of support. See, that was a Stevie trick question out here. What are those 2 levels of support? Well, take a look at its profile. Again, let me just expand this chart out here. That way everybody's just looking at the same chart. The 2 levels of support are rising trend line. So you can see that price pulled right back to that, as well as the center of its bullish structured daily profile. So the daily profile inside of gold, the bottom is 1920. The center is 1938, and the top is 1992. See how the center is closer to the bottom than it is to the top? So very strong support inside of gold between 1920 and 1938. Well, very much like we were looking at inside the ES Mini, inside the Dow equity future contract, because both of those are testing the actual bottom of their profiles out here. If gold were to close below 1920, what's the message that it would be sending to you? Lower price, and likely an A to B equals CD to the downside. But is that the message at 9:32 on September 17th? And the answer to that question is no, it's not. So gold has pulled back to a key level of support. Now, what we want to do from here is we want to go take a look at Goldilocks on a short-term time frame. So let's go try to, what's going on with this keyboard? All right, so I'm not going to worry about this chart. I'll come back and figure that out. But let's go see what gold is doing. So when gold is pulling back to support on a daily time frame, what we like to do is we like to go see, is there a bottoming signal going on inside of gold for that short-term time frame out here? Well, voila. This almost looks like we're looking at the chart for the NQ. What did the NQ do? The NQ topped with Rhodes momentum indicator signal. That's the black diagonal lines, and you wait for the bearish reversal candle. You can see the bearish engulfing candle. You may not be able to read out the actual description of it, but that's a bearish engulfing candle. You can see that for those of you that study those and you want to study those. And if you don't know your P's and Q's, your bullish and bearish reversal candles, another reason to just go subscribe to Mastering Probability and watch that workshop, because what I will do is I will condense decades into 1 hour, because I'm just going to show you what you need to know to assist you with your trading. Well, gold has got that same pattern. It's got the stretch pattern. We don't have a bullish reversal candle, but it's got the potential out there. So you'd be watching for a bullish reversal signal candle inside the gold contract. But price is back at support. We've clearly established that. Let's go take a look at silver. Silver's chart is going to be different than gold's chart out here. Again, the December contract is what we're going to go take a look at for silver. Let's move over to that. And so is silver pulled back to a level of support? Well, in the case of silver, you are looking at the very left-hand panel. Much like gold was pulling back to a trend line, silver is also pulling back to a trend line, but it's just slightly below that level. What you can see here is a bullish structured profile. So I'm going to ask you the question. I want you to take, because my goal in doing the show on a daily basis, or in the newsletter, which is very extensive, provides you with charts for nearly every commodity on a daily basis, is to really help you to make you become a pattern recognition master as well. And then you pass it on to others, because these patterns here that you and I are looking at, they've worked forever. You go back into the 1860s, and the chart patterns work the same. Stevie's red line, the TD 9 count breakout and breakdown levels out here, the TAS market profiles, It's a beautiful thing. Well, so back in silver, I was going to ask you, what's the question? If silver closes, breaks this trend line out here, where do you think price would head to? Exactly. You know the target. The bullish structured daily profile for the December contract for silver, which resides between 24.32 and 24.97. Now, I want to go take a look at the short-term time frame for silver as well. So let me get that going here. I thought I had typed it in, but -20. Let's get that going here. I think the market open, and I've got a bunch of charts that are being updated right now, so it's a little slow. But silver is really doing the same thing that gold is. So this chart looks similar. You can see the Rhodes Momentum Indicator top. By the way, if you don't know that pattern, another reason to subscribe to Mastering Probability, because there's a workshop out there that will teach you about this pattern, the exact details. But here we can see in the case of silver that pushed lower during this half-hour period at 9:30. Maybe it was just flushing out the stops out there. I don't know. How would we know? Well, we'll know if we see some type of bullish reversal candle form over the next coming half-hour sessions. Doesn't have to be this one between 9:30 and 10. But if you do see a bullish reversal signal, that would confirm the Rhodes Momentum Indicator bottom, very much similar to what we just looked at out here that you can see over on the left-hand panel for the Rhodes Momentum Indicator top. So we've taken care of gold and silver. What we haven't done is taken a look at the U.S. dollar index. So let's go take a look at it and see what it's doing. This has put in a bottom out here, and it's just struggling at resistance levels. But again, let's go take a look at the charts. Let the charts communicate to you and I what the U.S. dollar index is doing, is trying to do, and the levels for you to be observing. So we just took a look at short-term time frame charts, the 30-minute charts for gold, for silver. We've looked at some daily time frame charts. We have shown to you the importance of understanding the Rhodes Momentum Indicator signal out here. Here, what do we see in gold? Gold's pushing lower. You generate the bullish engulfing candle session out here. This was back on the trading day of, let me get my cursor out here. This is on the trading day of September the 1st. That is when the U.S. dollar index bottomed. Beautiful pattern. Now, whenever something bottoms, we have to understand where resistance is. Well, in this case here, one of the resistance levels that we use are our TAS market profiles. So here you can see the bottom. You can see it was a bearish structured profile. So we know where the sellers were hanging out here. And you can see as price on September 9th, beautiful day, got up to the top of that profile, that's where it petered out. Nothing against Peters out here or anything along those lines, but that is where it pooped out. So we do have things against poop. All right, so, and it stopped where it should have. Does that mean it's over? No, it just means that it found resistance and it's retracing, it's pulling back. Now there's a new profile that's also formed. This one is bullish in structure, so it is flip-flop, so to speak, but you still have resistance, and that's at 93.50. Let's call it 93.51. And that's the key level for everybody to be watching on the U.S. dollar index. Why? Because if the U.S. dollar index closes above the top of that box, that's going to communicate to you and I that it's getting ready to make its move to its TD9 breakdown level. That's 96.61. And as long as prices stays above Stevie's red line out here at 92.64, don't let anybody tell you that the dollar is toast. It ain't. It's just trying to break out. Steve Rhodes with TFNN. We'll be right back.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Direxion's daily S&P 500 bull and bear leveraged ETFs. Direxion leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit direxioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Welcome back, folks. Steve Rhodes filling in for Larry Pesavento. Of course, I'm going to be recording. I'll do the same thing tomorrow. So if you're listening live during the 1 o'clock Trader's Edge show, please join us tomorrow at 9 o'clock in the morning to catch the live show. So we got a number of questions that have come in. So let's get to some of those out here. The first one coming in from Mike H. Mike wants to take a look at UNG. So he wants to consider, well, he went long UNG on June 26. He said, would you kindly review various support levels where you might add to the position? Absolutely. So with regard to the natural gas contract, let me get back to all of the futures contracts, or many of the futures contracts here for natural gas, so we can take a look at those. And I believe what was taking place this morning is price trading well below the bottom of its profile out here. Now, you've got the October, which has 7 trading days left out here. That's your very left-hand panel. But if you were trading, I would imagine the UNG has got you're going to have to see what contracts, Mike, are inside the UNG. I don't know that. It's split between the November contract. Maybe it's got some November. Maybe it's got some December. Maybe it's got some January 2021. You need to find out. But here, when we take a look at natural gas and what it's doing, you can see as far as the November contract, this price is pulling back to a trend line. Will this hold or not? I don't know the answer to that. Probably not. Probably what we're looking at here is lower price. So let's go pull open my other charts here for natural gas, because what natural gas is doing, you asked the question, where might you add? I believe today is day number 6 or 7 of a TD9 count. Maybe it's day 8. It's day 8. Okay. So the question is, Mike's asking, is there a possibility that this is going to form a bottom out here? Today is going to become bar number 8 of a TD9 count. Now, on the TD9 counts, it's either bar 8, 9, or the bar following 9. I don't call it bar 10, but you call it whatever you want. It's one of those 3 bars that has to identify the low. Well, since we're already at a lower low below any of the first 7 bars out here, this qualifies that today could be the bottom. I'm not saying that it is. It could be tomorrow, or it could be Monday. But you asked the question, what's the pattern where we might be able to find the next bottom? I would watch for the TD9 count to see if it plays out. Now, I wouldn't enter. Now, if you take a look at the last time where natural gas formed the bottom, it was with the TD9 count. It was the bar following bar number 9. It was on the date of June the 25th out there. So it's a really important pattern. If you take a look at from there, you saw a TD9 count to the upside. Bar number 8 that was formed on July 9th. You see a lower high on July 10th. All that did was push price back to support. Where is support? Stevie's red line, basically red-green line out there. So look, the TD9 count does have an impact inside of natural gas out there, but you may not know, Mike, until Monday out there. So be patient, but do make sure that you've got to stop. Why? Because maybe the TD9 count isn't the pattern that's going to identify the bottom, and instead price is pulling back to support. And support here now, we've blown through, or it's blown through the bottom of its profile. Support becomes its breakout level. And the breakout level is $2.28. It's the low from July the 23rd out there. So thanks for writing in. Again, with regard to UNG, you really got to go take a look at what are the equity futures contracts, what are the natural gas futures contracts that make up that ETF. Alex writes in, he says, Alex is also asking about natural gas. Hey, Steve, natural gas has pulled back to the time for a long position. Okay, so we got a bunch of folks that are, or a couple of folks at least, that are looking for natural gas. Alex, the same thing. I think I'd wait until Monday. I'd certainly go down on the short-term time frame charts and look for some kind of bottoming signal out here. For example, let me get back over to the November contract here. Whoa, what the heck just happened there? Oh, my goodness, right there in the middle of a show. Okay, well, that's an interesting thing. You got to love computer systems, folks. Can't live with them. Can't live without them. That is for sure. Okay, so now we're back up and running here. And so I just want to punch up the short-term, the 30-minute, when I say short-term chart for natural gas. And no signal here either. You're going to pull this over. And you'll see that this, too, is in a TD9 count, potential TD9 count, with only bar number 7. So you got 8, 9, 10. You've got an hour and a half potentially before a short-term signal might be generated, but nothing that shows itself as we speak right now. Let me see. The next question comes in from Dwayne, it looks like. Dwayne says, could we take a look at FOXF? And the answer there is we can, FOXF. Let me get this rolling on my other charts out here, and let me get back to our 3 different time frames. We want to see how this is trading in relationship. First, we want to see what it is. Then how is this trading in relationship to its daily, its weekly, and its monthly set of profiles out here. So this is Fox Factory Holdings. Fox Factory Holdings is trading below the bottom of its daily, well below that. Now trading below the bottom of its weekly, which is at 75.57, and it has gotten back inside its monthly profile out here. So, Dwayne, the signal here is suggesting if you see a close today below 75.57, and especially if you see a second close tomorrow below that, that's telling you that price is likely pulling back to 65.81 to 52.42. That gets us into our monthly profiles. But we want to go take a look at Stevie's other charts out here, see what other levels of support or patterns might be going on. So let's come take a look at the daily time frame, do the same thing out here. Let's let everything populate so we can see where we're at on TD9 counts, on Chapman wave counts, the whole 9 yards out here, and we don't have any kind of a bottom signal. So, Dwayne, the next level of support on a daily time frame for FOXF is down at 59.07. That is its breakout level. Now, we do expect, or I do expect, at some point in time for things to catch hold and price to test Stevie's red-green line, the oscillator and change line. The reason is because this changed colors back on September 10th. Now, over the coming sessions, I don't know how many sessions, but over the coming sessions, we should see price and that line catch up to each other. So even if you do see price move higher from here, there's no bottoming signal, and instead, I'm helping you to anticipate that just because price is moving higher doesn't mean that the bottom's in. In fact, price could just simply be moving up to Stevie's red line, test it, reject it, and then say, okay, now I'm ready to move lower out there. In fact, that could be an A to B equals CD to the downside. That's the daily time frame. The weekly time frame for this, we already know it's trading below the bottom of its profile. No other patterns of support or anything out here. For that time frame, I'll switch over real quickly to the monthly. The monthly is bearish. The monthly is suggesting to you that this has formed a Rhodes momentum indicator top for a monthly time frame. Now, that is suggesting a pullback to 65.81, 52.42, maybe even 25.25 out there. But you got to take stuff one step at a time. So overall, what we have out here, the charts are indicating to us FOXF, Fox Factory Holdings, wants to continue to move lower. Let's see, the next question out here coming in from Ray. And Ray says, hey, Steve, can you take a look at the stock symbol APPS? I'm thinking in it 2450. So APPS, let's go see what this is. And this is Digital Tribune. Digital Tribune, but unless we see some kind of top, this is above the daily and the weekly and the monthly profiles out here. So this looks pretty good. You're looking at, I'm thinking of adding more as it drops back after a big run in the last 2 days. So this is Ray in Sarasota. So Ray, right now, well, I'll pull over my other charts while we go to the breakout here. But support, if you're asking where to pull, where's support? 3 levels, daily profile-wise. 2280, bottom of the box. 2426, center. And the top, because price is trading above it, that's your real first level of support out here, 2572. But your range to add to the position, unless we see some other kind of topping signal, for Digital Tribune is between 2280 and 2572. This is Steve Rhodes with TFNN. Dow's down 325, S&P off 44. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Real quickly, the NQ appears to be generating that bottoming signal for the 30-minute time frame out here. That's the Rhodes Momentum Indicator signal. We still have 6 minutes, but you can see you've got a nice bull sash candle out here. With regard to resistance right now, it's trading into it, so watch 11.052. That's the bottom of its profile. If pricing it above that, the next move would be 11.098. and above that because that's a bullish structured profile. So if the counter trend rally is going to end in the NQ, it's going to be between 11.052 and 11.098. And if price can close above 11.098, you're going to get a move to 11.174. Those are the levels to be watching. There will be other ones, but that's what you would be watching. Let's go out to Singapore real quickly and speak with Ray. Ray, we've got about a minute. Thanks for calling. Thanks for holding. How are you?
Hi, good morning, Steve.
Oh, shoot.
I would like to ask you
I can't hear Raymond.
the-
We've got a sound issue. So, Raymond, if you're speaking, my apology. I can't hear you in the den. Go ahead and shut that off because it's not going to help me. But I know you're calling about snow. And unfortunately, that's a new IPO from yesterday. I don't know how to analyze this, although you had some people that must have bought into about 320. It's trading at about 234 right now. I hear if you go take a look at IPOs, big IPOs out there, you want to wait for them to form some type of bottom. You don't really want to buy them. You can go take a look at all the major IPOs out there. And what you will see, here's the 2-day that you've got. What you will see is there's some type of bottom that will form. So my recollection, my suggestion to you is don't rush into snow. You see, snow has had only buyers up until yesterday. Only buyers. So let the sellers try to do their thing. You go back and take a look at Facebook's IPO or Google's IPO or just about any big IPO out there. You don't buy the IPO at the open. Let it form some type of bottom. Folks, thanks so much for being here. Again, I'll be doing the show tomorrow from 9 to 10 o'clock. And have a terrific Thursday. Take care, folks.